Let's go straight back to the exchange today, which admitted about 853 million units of the Nigeria Infrastructure Debt Fund, or NIDF. That stock was floated by Chapel Hill Denham. It was listed today at 8 naira 39 kobo to the trading board, adding roughly 100 billion naira to the total market value. Let's take a listen to excerpts from the facts behind the figures presentation of the fund.
And then the final thing, a few of the things that stand out to me from this listing is that for the first time now we can open up the infrastructure asset class now to retail investors. So if you look at the NIDF today, it's about 100 billion naira worth of market cap is what we have listed today. But maybe 99.9% of that AUM is institutional investors. What this is now opening up is a mechanism for retail investors to invest in this in what is a quasi-safe instrument, even though it's listed as equity. So for many of our intermediaries and for our ecosystem, where we continue to ask this question, that what else do we have to offer to investors? I think this is a very big shift now as far as that is concerned. So I really would like to encourage everyone, our intermediaries, our brokers, to learn a little bit more about this, and so that we can offer that to our clients. And then the final thing that I wanted to mention also is back to the subject of innovation. In our capital markets, we really do rely on innovation. And I really want to stress that the exchange is very open to continuous partnerships with many of our intermediaries. I spoke earlier, one of the things that concerns us is because the way we've seen in the last 5 to 8 years, a lot of our intermediaries are no different from the Japa syndrome, for example, that we suffer. We've seen lots of people diversify away from our business into other sort of, endeavors like real estate. So we're really open to, intermediaries who are keen to work with us, to invest, to develop the market. You would find a lot of very strong support in that. And I hope that Chapel Hill also can really testify to that.
NIDF was first for many things back when it was launched in 2016, 2017. And I think it has heralded a significant shift in terms of focus around infrastructure in Nigeria and the importance of local currency. I think today in 2023, we need to think about how NIDF can actually shift the way that the NGX as a market continues to grow. And as I said downstairs, about a third of the FTSE 350 companies in the UK are investment trusts. NIDF operates like a company. We have a fixed number of shares or units. And every time we raise more capital, we increase those numbers of units, and all unit holders have the same exposure to the same portfolio. I should say that we are in the process of raising the 9th series for NGX, and that will close later this month. And I very much hope that this is an opportunity for all of us, not just to look at NIDF as it is today, but also what NIDF will look like after that listing. If you look at what it will look like after that listing, and this is very small type, so I'm going to have to explain to you what's on the page. What this page shows is the largest 30 companies in Nigeria by free float. So by the shares that can actually be traded. And if you look at that, you'll see that NIDF after Series 9, will sit about, I think, 17th on this list, around the same size as NB and Transcore and Geregu. So I think it's important to mention that in terms of scale. What does NIDF do? We raise capital from investors. Historically, most of that capital has come from the pension fund community, but additional capital has come from insurance companies and foundations and retail, and obviously from our DFI and sovereign wealth fund partners. So from a very wide selection of investors. And then it invests that capital into project finance loans. And those project finance loans have very predictable returns. And we distribute all of the operating income every quarter back to investors. So when Anshul takes us through the returns, the returns are very real. You can get to touch them every quarter, and we're paying those distributions to all investors at that time. We invest in assets that you can kick. You can go look at the telecom towers or the mini grids or the ports or the power plants that we're financing. And I think that's an important element of what we do.
We started with, in 2017, with a portfolio of 3 loans in 2 sectors. And that has now grown to 20 plus loans in 9 odd sectors as of June 2023. And that diversification is on purpose. So we are not overly exposed to any single sector or sponsor or user. And that diversification continues. We expect that as before this year is out, we would have added a couple more subsectors to that list of sectors that we have historically financed. Returns, the crux of the matter. So 155%, I'm sure many of you have seen this number before, and we have spoken about it previously. This is a combination of the fact of the consistent performance that we have delivered and compounding, which is to reflect that if you gave us 100 naira at the start and then reinvested the distributions that we have made consistently since then your total investment today would be worth 255 naira. Most of it has been in the form of cash distributions, which is what those gray bars show you. And as you can see that it's been there is a consistent pattern here. And the greenish line at the bottom, that's the NAV, which is the net asset value, or reflecting essentially the price of the units. And that's been very, very steady, and you can see that kind of barely budges. And put together with the 155% return, now this is a very unique combination of very, very solid returns with almost negligible volatility.